landscape around D&O insurance has changed substantially since the 2008 financial crisis. And it's not just the energy sector and publicly traded companies that are being hit hard by this. The entire global D&O market continues to experience hardening market conditions. There are several escalating trends behind this, such as increased legislation, the pandemic of course, and event-based surges in class action lawsuits. Reliance has further investigated these issues and identified key insights that will help executives mitigate their D&O risks. We will dive into the trends driving premiums and the causes behind claims increases, which ultimately impact insurance costs and bottom line profitability. At this point, I'm turning it over to Terri Hayes, one of our D&O risk analysts.
As losses and claims costs rise, insurers are experiencing pricing inadequacy. Price corrections saw a sharp increase in 2019, and we expect to see pricing corrections continue to keep pace with loss costs as insurers aim to improve or create the profitability of their book. The D&O market is seeing an increased level of complexity, new and emerging risks, rising defense costs, and a global movement for regulatory compliance and accountability. In addition, there is a growing trend for claimants to seek punitive and personal legal action against officers. But with the right research and risk mitigation plan, D&O insurance can be used to recover defense costs and financial losses, as well as costs incurred by administrative, investigative, and criminal proceedings. Investors and employees are driving corporate behavior and defining culture. Following in the footsteps of a robust activism in the U.S., the trend is on the rise globally. Outsiders are influencing corporate conduct and decisions. Emerging trends include cyber risk, sexual misconduct, cryptocurrency, climate change management, failure to comply with reporting requirements, environmental impacts, mergers and acquisitions, and use of AI.
If asked to sit on a board, there are many considerations for a career executive to make before taking the appointment. Ensure any organization you're considering has a D&O insurance program that adequately reflects the risks inherent to that entity. Executives and directors need to ask tough questions about compliance-related topics such as sanctions, embargoes, tax haven registrations, price fixing, and fraud, as well as keeping in mind the more classic D&O risks like M&A, capital measures, conflicts of interest, and IPOs. Now is the time to identify gaps and determine which ones can and cannot be closed before taking the appointment.